We're jumping straight into Algorhythm Holdings today. Everyone is watching the price action, but the real story is the massive pivot from consumer electronics to AI-driven logistics.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
Before we get into this absolute roller coaster of a stock, make sure you subscribe and hit the like button. We are here to simplify the market for you every single week, and you just don't want to miss the next one. Now, let's look at the board. We need to frame this properly because the numbers we saw on Friday, February 13th were, well, they were not normal.
Not normal at all. We saw Algorhythm Holdings hitting a 52-week high of $6.21.
Which, okay, on its own, that's a nice jump. But when you zoom out, the context is just wild.
It really is.
Right, because this thing was trading at 73 cents not that long ago.
73 cents.
We're talking about a stock that was, basically left for dead in the sub-dollar band.
Mm-hmm.
It's been bouncing violently between $1 and $6, closing recently around $4.50. But that Friday chart,
It went vertical.
completely.
It did. And, whenever you see a microcap stock something with a valuation under, $10 million, suddenly wake up and sprint like that, you have to ask a question.
Is it real?
Is this a pump or is this a pivot? Because price action, that violent, usually tells you that the market is trying to reprice the entire future of the business.
All in one afternoon.
In a single afternoon, yeah.
And that brings us to the most bizarre part of this whole story.
Yeah.
If you look up Algorhythm Holdings, or, if you knew them by their old name,
Mm-hmm.
you'd know them for karaoke machines.
Yes, the singing machine company.
I grew up with those.
Mm-hmm.
If you went to a house party in the 2000s, there was a singing machine there.
Mm-hmm.
So help me understand this. We have a legacy company that makes consumer karaoke gear,
Right.
and it's suddenly spiking 500%
Okay.
because they're fixing the trucking industry.
It sounds like a fever dream, doesn't it? But that is exactly the narrative arc that's driving all this volume. This is what we call an identity pivot.
An identity pivot.
They aren't just launching a new speaker. They have restructured the entire holding company. So on one side, you've got the legacy business, singing machine. On the other side, you have the new focus, SemiCab.
Which is the AI-driven trucking platform.
Correct. And the market is effectively saying, we don't care about the karaoke anymore. The investors piling in right now are betting that this is no longer a consumer electronics dinosaur.
They believe it's a tech platform in disguise.
Exactly. A burgeoning tech platform disguised as one.
Okay, so let's strip it down then. Why trucking? I mean, if I'm a karaoke company looking for a second act, maybe I go into audio streaming or, I don't know, party planning. Why logistics?
Because logistics is broken.
Yeah.
And it's broken in a way that really only data can fix. The specific problem SemiCab is trying to solve is something called the empty mile.
The empty mile.
Right. In the trucking industry, something like, 20 to 35% of all miles driven are deadhead miles.
Meaning the truck is empty.
Totally empty. The truck drops off a load in Chicago. It needs to get to St. Louis for the next pickup. And it drives that entire distance empty. It's burning gas, it's burning time, and it's making zero money.
It's basically setting cash on fire on the highway. And from what I understand, this isn't a small problem. We're talking billions in waste here.
Tens of billions. And for decades, the solution was just manual bakers. Guys on phones trying to match shippers with truckers. Hey, I got a guy in Chicago. Can you use him? It's so inefficient.
It's slow.
It's slow, and it relies on humans noticing patterns that are way too complex to track manually.
And this is where the AI buzzword actually means something. Because every company claims to have AI now.
That's the claim, right? The idea is that SemiCab isn't just a digital bulletin board. Their moat, the thing that makes them special, is supposed to be this proprietary AI that creates what they call collaborative transportation.
So it's not just matching one truck to one load.
No, it's using algorithms to predict routes and bundle shipments so that the truck is almost never empty. It orchestrates the whole network so that shipper A and shipper B unknowingly collaborate to fill the same truck.
So it's like Tetris for freight.
That is a great way to put it. It's high-stakes Tetris. And the reason the stock is going vertical is that the market believes we are at an inflection point.
The thesis being that the trucking industry, with its super tight margins, is finally desperate enough to adopt this kind of tech.
At scale, yes.
But let's dig into that moat idea a bit more.
Yeah.
You mentioned network effects. In my head, that means the service gets better the more people use it, like a social network. How does that apply to a semi-truck?
Well, think about it like this. If you only have 10 trucks on your platform, your AI can't really do much optimization. The data set is just too small. But if you have 10,000 trucks, suddenly the AI can see all these patterns. Oh, every Tuesday a truck leaves Detroit empty, but a shipper in Toledo needs a pickup. The more users they add, the tighter the grid becomes, and the more money everyone saves.
Which creates a flywheel effect.
Precisely. And that leads to switching costs. Once a trucking network integrates this system, once they start relying on that AI to keep their trucks full, they aren't going to leave.
Why would they? Going back to the old way would mean losing money. The revenue becomes sticky.
It becomes very sticky.
I want to push back on this a little, though, because AI for trucking sounds like something 10,000 startups in Silicon Valley are pitching right now. Plus, you have the giants.
Yeah.
You have C.H. Robinson, you have Old Dominion.
The big guys, yeah.
These guys have billions of dollars. Why can't they just build this themselves?
And that is the valuation paradox. It's a classic innovator's dilemma. C.H. Robinson is a massive ship to turn. They have thousands of employees, legacy software, a business model built on traditional brokerage fees.
If they automate everything.
They might actually cannibalize their own revenue streams in the short term. It's a huge risk for them.
So they are trapped by their own success. They can't burn down the house to build a new one.
Exactly. Meanwhile, Algorhythm via SemiCab is the nimble speedboat. They don't have that legacy baggage in the logistics sector. They can come in with a pure-play tech solution, and the market loves a David versus Goliath story.
Especially when David is armed with an algorithm.
Right.
And David is currently valued like a lemonade stand.
Well, a very expensive lemonade stand,
Yeah.
but yes. The market cap is roughly $9.5 million.
That is the part that just blows my mind. We're talking about disrupting an $800 billion trucking industry, and the company is valued at less than $10 million.
And that is the math the bulls are doing. They look at that $9 million market cap and say, if they capture even a tiny fraction of the market, this stock is a 10-bagger.
It's a call option. You aren't buying the current revenue. You are buying the potential.
The potential of the disruption, yeah.
Speaking of buying, we have to talk about Friday the 13th. The date is spooky, but that volume was terrifying. I'm looking at the data here. Volume spiked to 167.4 million shares.
It is a staggering number.
For context, the average volume is around 22 million. So we saw almost 8 times the normal traffic in one session. To me, that doesn't look like retail traders just having fun on Reddit.
No, it indicates a massive momentum inflow. When you turn over the entire float, all the available shares, multiple times in a day, it means the psychology of the stock has shifted. It implies a breakout.
It broke through those resistance levels that had held it down for months.
It feels like a stampede, doesn't it?
It is. And when you have that much volume and the price is closing near the highs, it tells you that people aren't just selling the rip, they're buying the dip. The conviction is high.
Yeah, that's a good point.
Okay, so that's the bull case.
Yeah.
Buy the ticket, take the ride, hope the AI Tetris works and they become the next Uber for freight. But
Yeah.
we don't just drink the Kool-Aid here. We have to look at the label on the bottle.
And the label has some serious warnings.
Let's look at the flip side, the bear case. Because when I look at the financials, I don't see a tech giant. I see a company that is bleeding.
You're right to be cautious. The first and most glaring risk is their financial health. The company is unprofitable.
And not just Amazon in the 90s unprofitable.
Oh, they have a negative PE ratio of negative 0.02. They posted an earnings loss in 2024. Cash is going out, not coming in.
So the karaoke machines, we keep calling this a pivot, but they haven't sold the old business yet. They still own Singing Machine. And right now, that is a massive drag.
It really is. It's weighing them down. The data shows declining operating margins in the consumer segment, but worse, the ratio of SG&A, that's selling, general, and administrative expenses to sales, is going up.
Okay, translate that for someone who isn't an accountant. Why does that matter so much?
It means they are spending more money just to keep the lights on and sell products, but they're getting less revenue in return for that spend. It's inefficient. So picture this. You have this shiny new Ferrari engine, the SemiCab AI, but you've bolted it into a rusty old station wagon that has flat tires. That's the Singing Machine business.
You're trying to win a Formula One race while towing a boat.
That's a vivid image, but yes. And that creates a cash flow crisis. To make SemiCab work, you need those network effects we talked about. You need to get thousands of truckers onto the platform. That costs money.
A lot of money. Marketing, sales, development.
Money they might not have because the karaoke site is burning through it. That's the tension. Free cash flow is challenged. And we don't have full visibility into the 2025 balance sheet on debt versus cash yet. But we do know one number that scares me.
Lay it on me.
25.
25 million.
No, 25 people, approximately 25 employees for the whole company.
Wait, hold on. You're telling this company that is managing a global consumer electronics supply chain and building a revolutionary AI logistics platform has the headcount of a fast food shift.
It is incredibly lean. And this is what we call holding company risk. You have a tiny team, a skeleton crew, trying to manage two vastly different industries. You have to ask.
Do they have the bandwidth? What happens if their lead engineer gets the flu?
Does the whole AI update get delayed? If their head of sales quits, does the karaoke revenue just collapse? It seems incredibly ambitious.
Or maybe just stretched too thin.
It's walking a tightrope without a net. And that leads directly to the volatility we talked about. Yes, the stock went from 70 cents to $6. That's great if you bought at 70 cents.
But if you buy at $6 and they miss an earnings report,
yeah,
it's a long way down.
It can be violent. This stock has a low float, not many shares out there. When good news hits, it rockets up because there are no sellers. But when bad news hits...
everyone rushes for a very small exit at the same time.
Exactly. And a lot of this price action is built on what you called unconfirmed chatter. The SemiCab will reshape freight narrative is high conviction, but it hasn't actually happened yet, not on the balance sheet.
You're buying the dream, not the bank account.
You are buying the algorithm.
Okay, so let's synthesize this. We have the bull case, massive volume, a sexy AI story, huge market, and the bear case, no profits, a legacy anchor, and a tiny team. If I'm a listener sitting here thinking, okay, this is interesting but dangerous, what are the specific triggers to watch in the next 30 to 90 days?
The next 3 months are the prove it phase. And the number one trigger is the earnings report.
That's the moment of truth.
Absolutely. And you don't even need to parse the whole report. Just look for one thing. The revenue mix. Can the ramp-up of SemiCab revenue actually start to offset the weakness from the karaoke segment?
We need to see that baton pass, see that the new business is starting to pay the bills.
That's it. The consensus is looking for a potential Q1 2026 beat based on that AI traction.
Yeah.
If they show SemiCab is generating real cash, the stock flies. If they miss, if the AI revenue is still in development,
The market will punish them.
severely.
What else?
You have to watch for corporate updates. Go to their investor relations site. We need tangible proof of life. Are they showing up at AI freight conferences? Are they announcing partnerships? If they announce a pilot program with a Walmart or a Target.
That's rocket fuel.
Total rocket fuel. And finally, you have to watch the macro environment. We're in a unique cycle where AI is the magic word.
The AI halo effect. If it says AI, people buy it.
Right. If money continues to flow into AI stocks, algorithm floats with the tide. But if we get an AI bubble scare, if NVIDIA or Microsoft stumbles, these speculative microcaps are the first things people sell.
They're the riskiest assets. First to get cut when a portfolio manager gets nervous.
And, keep an eye on interest rates. This is a growth story. Growth stocks love lower rates. If the Fed cuts, that's a tailwind.
So it's a mix of internal execution, can those 25 people pull it off, and external market vibes.
As always.
This has been a fascinating look at a company that is truly trying to reinvent itself. And I think that is the final thought here, this idea of the identity pivot.
It is rare to see one this extreme.
It really is. To go from karaoke to AI logistics sounds like a joke setup. It sounds like something a desperate board came up with at 2 in the morning. But what if it works?
If the proprietary tech actually works, if they actually solve the empty mile problem,
Then the legacy business doesn't matter. It becomes a historical footnote. This is the elevator pitch. A microcap surging on big news, massive volume, and a dream of pivoting away from losses.
it is the ultimate high-risk, high-reward play.
Just remember, gravity applies to stocks too, and that is the lowdown. Remember, watch the volatility, do your own research, and don't get swept away just by the hype.
Thanks for listening, everyone.
We'll catch you on the next one.